Welcome back. The market's absolutely flat at an index level. Kajaria Ceramics is the company that we are speaking with next on our corporate radar. They told us earlier that they expect volume growth of between 15 to 20% in their business in FY23. That'll be a big improvement as compared to the last 3 years. And that margins will also expand if gas supplies improve. There is also an interesting note by Jefferies which says that that exports out of Morbi could rise to 50% of production in 3 years as compared to 35% right now. So more export focus out of Morbi. Mr. Ashok Kajaria is CMD at Kajaria Ceramics. He's joining us right now to take some questions. Mr. Kajaria, thank you for joining us.
Morning.
You were just telling us that the Morbi cluster has been shut from the 10th of August, right? It only till the 10th of September.
There are roughly about 750 plants out there. They're shut down. They have taken a plant shutdown from 10th of August to 10th of September. Right now, there are about 74 plants working. That's what our information is. And about 675 are shut down.
And there's clarity now. They will open from the 11th of this month?
Yeah. They should start working from 11th. That's what the information.
In a phased manner? Or...
Yeah.
Okay. And they'll start to focus on and they'll use propane or natural gas.
See, out of 750 plants, about 150 plants are currently on propane, but there is some price difference in propane and gas. Normally, it happens three months in a year. That's what has been happening. But unfortunately, because of this problem at Ukraine and Russia, the gas prices have gone through the roof. So that's why they are able to use propane right now.
Mr. Kajaria, good morning. So, Jefferies put out this report where they said that the exports from Morbi are expected to rise to 50% of production in 3 years versus 35% now. Can you tell us, is that a reasonable assumption? How much is Morbi exporting currently? And what would this mean for your own business?
See, last year data I give you, it will have information to you. Last year, the industry was 21,000 crores of domestic and 12,700 crores of exports. This year, what we are looking at, the scenario, the domestic should grow at about 22,500 crores. Export should grow at 17,000 crores plus, which I shared earlier also in my earlier interview. Why? Because in spite of the gas prices having been raised in India, we are very competitive compared to Europe. Europe, the gas prices have gone up by almost 6 to 8 times. So India in the export market has become very competitive. And you'll be happy to know that the biggest market today for India is America, USA. Next is Saudi Arabia in spite of anti-dumping. So and for the first 3 months, the exports have been to the extent of about 4,000 crores.
Okay. So you're saying if exports are going to be at 17,000 crore plus from Morbi, what would this mean?
Total exports from India will be 17,000.
Total exports, okay. And for your own company, can you tell me what would the export growth be and what would this mean for overall volumes? Because you've guided for 15 to 20% volume growth, but now after becoming more competitive, you think you can do better than that?
No, I think it will be a difficult task to do better than that. We are aiming at 15 to 20% volume growth. That we are sticking to it, and we are putting all our 6-year efforts to do that. See, unfortunately, July, August has been tough for industry. That's why Morbi has also taken a 1-month shutdown for the plant shutdown. At the dealer level, the inventories are still there in July and August, but everybody is hoping that from September onwards, things should start looking up. Because September is a pre-festival month, and after that, next 6 months, as we all know, are very positive for all the industries, more or less, and especially for the building industry, will be very, very positive. So I'm sure that we should look at a 15 to 20% volume growth and 20 to 25% revenue growth also at the same time for the year.
Yeah. Last 3 years, volume growth has been about 6-7%, right? For you?
No. Last year, the volume growth was 22%.
3 year CAGR, sir.
Last year, the volume growth was 22%.
Over a 3 year...
The revenue growth was 33%.
Yeah, last year. I'm talking about last 3 year CAGR.
Yeah. It's been tough.
Yeah.
Before that, it's been tough.
Yeah.
And things are better on the ground level. Getting better on the ground level. And the key reason, as I've always said, is GST.
Okay. Yeah. Mr. Kajaria, you continue to largely operate, you and Somani, etc., on natural gas, right? Your plants.
Yes.
When you said that you're becoming more competitive, was Europe a very large competitor? Plants there?
See, For exports, Europe has been one of the biggest competitors. Even China, the gas prices have gone up very high. Industry is passing through very difficult times in China because, as we are all aware, some of the builders over there have gone bankrupt or haywire. So China is also in difficult conditions. India, as far as exports are concerned, is very, very competitive. Very, very competitive.
China is a net exporter of ceramics, sir? Or traditionally, historically?
No, China has been a good exporter, but of last 3 years, a lot of anti-dumping has been put in. And due to COVID, a lot of people have reluctant to buy from China. So I think India has taken advantage of that. And just for information, China was the biggest exporter. Their exports have come down by almost 50% in the last 2 years. And India, which was literally non-existent in USA, has taken a big market lead as far as the US market is concerned.
These are changes which will last, which are in a way permanent, sir. These kind of changes, or
should last because we as a country are very, very competitive, and a lot of credit goes to Morbi people because we are very competitive as an industry.
Okay. Can you tell us a little bit about the gas supply issue? How is it currently? And this leads me to, what happens with margins, because you had said that the margins will improve further if the gas supply improves. What would the margin band be?
Margins are under a lot of pressure right now. The gas prices have gone through the roof, as we are all aware, because of this war. There is also some cut in the northern plants by GAIL. So currently we are facing a lot of pressure as far as margins are concerned.
Okay.
Things should start looking up for second half, but as of now, we are under a lot of pressure as far as margins are concerned.
So when you say a lot of pressure, you're sitting still at 15% margins, which is not bad considering the challenges. Through the course of the year, can you maintain double-digit margins, or do you fear that it could perhaps go to single-digit as well because of the gas situation?
No. We are confident. Whatever the scenario would be, we should be between 15 to 16% EBITDA margins for the full year.
Okay. And any more price hikes that you can manage, or not quite because of the demand situation?
We have just taken a price hike from yesterday of another 10 rupees a square meter, which is about roughly 2 to 2.5%.
Okay, so 2 to 2.5% price hike is what you took yesterday. Is that it for now, or could you take more?
For the time being, yes, that's it. Then we look at how the scenario goes as far as gas is concerned.
Yeah.
That's the thing which is a challenging task right now.
Yeah. No, absolutely. Point taken, sir. But otherwise, demand, etc., is pretty strong, right? Overall, local demand.
July has been tough, as I said. First quarter was good, and we are hoping that September onwards things should start improving. The dealers are confident that with the festive season coming in, things should be better from September. They have some pipeline. That is why the Morbi people have also taken a shutdown for 1 month.
Right.
I think that's a very positive decision on part of Morbi people, because that will even out the demand supply.
No, so the shutdown primarily, that is largely a gas supply issue, right? Prices of gas...
No. Also demand. Gas was not a problem for them. The demand supply mismatch.
So there was too much in the market already, oversupplied market.
Exactly.
And that is evened out now, you're saying? Should even out?
1 month of shutdown from Morbi is a big thing as far as industry is concerned.
Okay.
You were telling us about gas prices. What is the spot gas prices currently? Has it cooled off from the peak in any way?
No. Gas prices have not cooled off. It is at the highest what we have seen in the last so many years. Okay. It's currently at about 61 rupees per SCM. All plants combined.
Okay.
All right. All right. Thank you very much, Mr. Kajaria. Great speaking with you, sir. It's always a learning experience. Thank you indeed. So many facts and figures and numbers from Mr. Kajaria there. It's just incredible. But that point that he made that, general level of competitiveness has gone up. And now in terms of exports, ceramic exports, India is a large player. And hopefully that is here to stay. It's not a one-time thing which disappears, and it's kind of here to stay. And US, of course, bulk of the exports go to the US is what he said.
Yeah. And despite everything, he's still holding on to the 20 to 25% revenue growth guidance for the full year. Not bad, given the challenges and so much margin pressures as well,
absolutely.
right?
Absolutely.
Yeah. Okay. Well, another space that we're looking at is the commercial vehicle sector. Now, the big trend this time is that commercial vehicles growth rate has slowed down quite a bit. So for Eicher Motors, for example, it's been a single-digit growth that we've seen 4.4% year on year. Of course, the base effect has come off as well, but its peers have also slowed down in terms of growth. Vinod Agarwal, the MD and CEO of the Volvo Eicher Commercial Vehicles division, joins us now. Mr. Agarwal, just wanted to ask you what's happening here. Is it largely because the base effect has worn off, or is there genuinely a bit of a slowdown in terms of demand?
Yeah, it was basically the month of August. There is also impact of monsoons. So I think it's that. Otherwise, CV industry per se is doing very well, and we are expecting good growth overall for the year. So there is no concern.
Monsoons, can you just quantify it for us? I mean, it's down for the second straight month now. You've sold just 5,000 units in August, which is, a 16% fall compared to last month. You're saying that this is a seasonal thing? Every time the monsoons come up, the demand slows down like this? And what do you think the average run rate could be from this 5,000 unit level?
Look, if you look at first 5 months, we have sold 28,500, and which is 91% growth over previous year's first 5 months. And if you look at the industry has grown by 88%. So we are doing better than the industry, and industry is growing as per our expectations. If you look at the overall industry sales, I think this year in balance 7 months, if we project based on the last year's 7 months, and if you add some nominal growth in that, I think we will be quite close to the earlier peaks of 18-19. Some of the segments, like for example, light and medium duty, 5 to 15 ton, or even if you take sub 3.5 ton, these are the segments where you will cross the earlier peak of 18-19. Even though in the heavy duty trucks, we will still be slightly away from the earlier peak, but in heavy duty, there is also a lot of migration that has happened to higher tonnage vehicles, like movement happening towards tractor trailers, as well as multi-axles, which are 10x2s. So therefore, there is more migration towards higher tonnage. So if you look at the tonnage-wise, the industry will be even capacity-wise, it is good. Even though numbers-wise, it looks still far away from the earlier peak in heavy-duty segment. So therefore, overall industry is going absolutely as per our expectation. And since we had a very, very, very deep recession in 3 years, and now of course we are recovering, and we are expecting good growth coming in the CV industry, even though still it will be slightly lower than the earlier peak overall.
Okay, I'll come back to that in a bit. I want to ask you about your overall, growth guidance for the full year. But I wanted to talk a little bit about the bus segment, because over there, bus demand has come back in a big way since the reopening of schools and offices. And you've gained your bus market share quite a bit. I mean, in FY09, I remember it was just 5%, and you ended at 21% in FY22. Have you gained further market share? Any fresh orders that you've got in the bus segment?
This year, first 5 months, we are at 25%. So we are consistently gaining in the bus segment. Schools, the demands was quite normal in last 4 months. However, still there is not much demand coming from the intercity and the tourist and the coaches. So we are expecting in 7 months now, in balance 7 months of the year, more demand coming from the intercity segment or the tourist segment or state transport undertakings. I think state transport undertakings, they have not replaced their fleet for long. So there will be good demand from them, and at the same time intercity coaches. School season is almost over now, so maybe it will again restart from the last quarter. So overall, bus demand this year will be much better, because last year, full year, the bus industry sales were only around 18,000. And this year, first 5 months itself, it is 24,000. And we are expecting that balance 7 months, we should be cover further ground, and we should reach to the near to the earlier peak of around 70,000 units industry for the bus. And this year, maybe it will be around 50-55.
Okay.
So therefore, still we are away from the earlier peak, but I think there is very good recovery as compared to the previous year, which was only 18,000 full year.
Okay, that's impressive. You've also floated a separate electric vehicle arm, VE Electromobility. Wanted to understand a little bit about that. Any orders that you won there in the electric vehicle space? Anything in the pipeline?
We have already started running electric buses in Chandigarh, city of Chandigarh, where we are servicing an order for 40 buses. And we have another order from Surat city. There the order is for 150 buses. And the new business model for the electric buses is that these buses have to be run by the OEMs. So we have to take the full responsibility for next 12 years for running these buses, including the maintenance and entire infrastructure. So therefore, the entire running of these buses will be done in this new company, VE Electromobility. That's why this new company has been floated to run these buses.
Okay. So what kind of growth would you expect in the electric vehicle arm? I mean, with these orders, you said that you have an order of 150 EV buses in Surat. And can you tell us the order from Chandigarh as well that you've executed? And what would this mean for the overall growth in CVs?
CVs still, electric buses still are a very small portion. If you look at overall, still it is very small numbers overall industry-wise. Still there is demand for the ICE engine only as far as the buses are concerned. But going forward, there will be more and more electric buses. As you see that recently the CESL, they have finalized the order for 5,000 plus buses. And now they are talking of floating further tenders. In one of the interviews by them, they mentioned 50,000 buses. So I think these are the type of potential which is there in the electric buses. You will see more and more tenders coming in from the government. At the same time, the private companies, like for staffing segments and for other smaller routes, there will be electric buses operating. And of course, these buses, private tenders or private routes, there may not be the subsidy from government. So government subsidy was there only till FAME 2. Now we are still not clear whether they are going to give subsidy for the next tender or not.
So you said CESL has finalized an order for 50,000 EV buses, is it?
5,000.
For 5,000 EV buses, okay. And that tender is out?
That was finalized a few months back, and now of course they were saying that in future they are going to come out with a tender for 50,000 buses. So that's the future forward statement which they had made.
Okay, all right. We leave it at that, Mr. Agarwal. Thanks a lot for joining in. So that's Eicher Motors. They are also expanding quite a bit in the electric vehicle space. They've gotten some orders in Surat and Chandigarh for electric vehicle buses through their subsidiary that they have, VE Electric Mobility. Let's do one thing. Let's slip into a quick break. On the other side, Mitesh Thakur will join in for some technical trades. Do stay tuned in.
Welcome back. Well, the market's at low point of the morning. I mean, just look at how it's turned. It was up almost 100. It's now down 50. 17,490. We were at 17,650, remember? We're at 17,490 now. Now getting towards the yesterday's low. Yesterday's high was rejected. Now let's see if yesterday's low is supported or not. Normally happens on the inside days. But then let's see if the market has something else on its mind. Let's ask that question to Mitesh Thakur, actually, who's joining us now. Mitesh, a lot of selling in some big names like Reliance, which has continued from yesterday. In fact, yesterday it was down quite a bit. Another 1% down. That's impacting the market. Your thoughts and your stock calls for the rest of the day?
Anuj, yes, I think Reliance, is slightly a drag. Yesterday, we had a STBT over here purely because it closed below some key averages. So it's still, in a broader contraction kind of a period where 2350, 2360 on the downside to about 2800 on the upside looks like to be the medium-term trading range. So I don't think we have a signal of going beyond that, but within that range, I think it could be headed towards the support pivots on the lower side, which is first 2500 and below that is 2400, 2350 area. So that's the kind of slightly mildly negative outlook in the short term on the price chart over here. On the stock side, NHPC is something which is seeing good traction on the upside. So that's a buy. Keep a stop below levels of 37 here and a target of 40 on the upside can be looked at. And MGL or Mahanagar Gas Limited is broken out with good price and volume action. That's a buy with a stop at 877 for targets of around 915.
Okay, thanks a lot for that. Have a good day and a good weekend as well if we don't speak to you again. Let's go across to Rima now. She's tracking NTPC this morning. Rima, over to you.
Thanks so much for that. So NTPC has received 13 bid from marquee investors like Canadian Pension Plan Investment Board, CPPIB, ArcelorMittal, Malaysia's Petronas, Brookfield, and this is to pick up a minority stake in NTPC's subsidiary, the renewable arm, NTPC Green Energy. NTPC is looking at a minority stake sale in this green energy business between 5 to 26%. The exact quantum of sale is not decided, but the company has proposed to raise 2,000 crore of equity through a private placement, and then they are also planning an IPO. Perhaps that will take some time. The company has indicated that they will, now that they've received these 13 bids, expression of interest, they will firm up and call the bids from the bidders in a month's time. Back to you.
Okay, thanks a lot, Rima, for that. So we just spoke to the management of Eicher Motors on the commercial vehicle sales, but the focus that I have is on the Royal Enfield business, which has been doing really well. In fact, the numbers for the month of August are staggering. Highest sales of 2022 is what Royal Enfield has posted. It's a 53% growth year-on-year and a 26% growth on a month-on-month basis. Now, if you look at the chart, 70,000 units compares to on an average of 55,000 to 69,000 units in all of 2022. So clearly, I mean, that bar chart just indicates that the sales have gone up substantially. They had a new launch, the Hunter, and because of that, perhaps sales were incremental this time around. But, you know, it speaks a lot about what's happening with the company as well. There are multiple resignations at Royal Enfield, but that has not deterred the sales. So I guess people come and people go, but if, you know, I mean, if the product is good, yeah. And Siddharth Lal is still there at the helm, so people believe that he's a brand in itself. He's grown this brand to where it is today. So these multiple resignations, although on the back of your mind, you still worry a bit about how the functioning of the company is going to go forth since there's so many resignations. But for now, the sales have looked pretty good.
All right, that's Aisha for you. Now, Bharat Electronics is the next one in focus. Vahishta is here to talk about that. Vahishta, hi, morning.
Hi, good morning, Prashant. Well, Citi has released a new report on Bharat Electronics wherein they have a buy rating on the stock and the target price has been raised to 356 rupees from earlier 342. The company is continuing to benefit from strong structural tailwinds in defense manufacturing. The FY23 prospects also continue to look healthy for the company. The company reiterates that there will be 15% revenue growth and 21 to 23% margin target. The medium-term outlook also continues to remain robust. The company continues to see healthy order win opportunities in the industry, and they are expanding footprints in allied non-defense areas and defense exports. Citi says that the company is reasonably valued at the current levels.
All right, Vaisha, thank you very much for that. Well, the market's down about, what, 40 points right now. 17,500 is where the index is at. Broader markets are doing just fine. I mean, mid-caps and small-caps, for example, both these indices are higher. And advances outnumber declines by about 100 odd stocks. So it's close, but we'll see. It's time for a quick break here. On the other side, in our special segment, it's the economy. My colleague Lata speaks with Santanu Sengupta, Chief Economist at Goldman Sachs, to decode the first quarter GDP numbers and the overall macro scenario. Stay with us.